Alright, welcome back, guys. It is Wednesday, November 22nd, 2023. Happy early Thanksgiving, and this is going to be our video for today. There won't be a video for Thanksgiving, and I will do probably a wrap up review on Friday or Saturday. But Friday is only the market closes at 1 o'clock Eastern. So, if I skip that one, don't be surprised. Especially since we got the holiday going on and other stuff going on, like Beat Michigan week. So anyway, what do we got here? The YM or Dow futures uh, contract, the E-mini futures. This thing's been precipitously falling lately, and that's driving me a little crazy, but it is normal. And yeah, I guess that's part of the video I'll do on the weekend, just to make sure we pull up the over 1 year's worth of data and take a look at it and just make sure this doesn't look like any kind of an anomaly, and I can tell you it doesn't. So that's today's action, and we had 1, 2, 3, 4, 5, I think, trades there. 1, 2, 3, 4, 5, 6 trades. So bearish day in our account. This is the Russell, and it had one negative trade today, or just one trade period, and it was negative. The NASDAQ has been actually rising back up again, but even today we had um, more losers than winners. Actually, there's 2 pages um, because this thing, well, I shouldn't say because it trades this much, but it just spilled over on 2 pages. So we had some winners and losers. That first one, that hurts, but then we had some winners. We had this one here, but then this last one hurt too. So it is what it is. Again, you lay this thing out in a year's worth of data, and it's this equity curve. You can hardly see these humps and bumps. So it just looks like it's going straight up, left from bottom left to upper right. And that's the automatic trading systems. Moving to the actual stock charts themselves in Thinkorswim. Um, the S&P 500 here, this is a doji. We had a doji yesterday. We've popped up to a new doji, or spinning top possibly. If that's a top, I mean, it will open lower on Friday. If not, this thing could doji all the way up here for till we get to this white line, and then I'm expecting some resistance up here. But I've been expecting resistance, and this thing's been walking up. Uh, basically defying gravity here. So I did want to take a look down here. This is what it looks like along with the average true ranges. These are Keltner channels, but they're set up with 1, 2, and 3 average true ranges. And you can see that I've also got the ATR stop on here, trailing stop. So anyways, this, it's up here above that higher ATR. You can see it's defied gravity up there before, pulls back, and this one actually kept going. This one did too. So sometimes they just do that. This one went up against it, came up like that, and started to lose momentum here, and then fell. So that's why we trade this thing day to day. And it's not even like I'm in the S&P right now. It just happens to be really the marker for the whole market. And if we look at the Qs, just because it's an easy one to look at, it's up there too. If we look at DIA, that's the diamonds, that's the Dow. It's actually looks, it's less of a topping looking candle. So there, this thing could have some legs, or we could, like, again, we could just pull back. The moving averages are right here. Could just pull back into these moving averages, which it wouldn't be unhealthy at this point. At some point, I expect this gap to get filled, and that might be where it pulls back to, and then we just take back off from there. That would kind of make sense, even where we're at here, because that lower moving average is right there. And what did we miss? RUT. Just look at them like this. Maybe it's simpler. Um, yeah, this thing looks like it could get legs right here. So we'll watch that, and I'm actually looking for an entry here to be able to get into IWM, which is the same. It's the tradable instrument for it. And IYT. That's the transportation index. And you can see I've got alerts all over this thing to try to get in, although I think some of them need reset, like that one right there might make more sense up there. So, um, yeah, I don't know if that helps, but looking at it this way is a really simple method of looking at. I mean, let's look at any stock. Apple's a fun one. It's up here, right? This would not be a good place to initiate a position. It'd be a place to potentially take profit. Um, let's look at LVS, Las Vegas Sands. This thing is, it's crawling higher at this point. Maybe there's better positions, but um, it's not up here. I mean, if there's a chance this thing could take off, even if the market does pull back. And GDX is a good one. So this is kind of like when you do initiate a position right here. It's got potential for that. And where am I trying to get it to? Up here to that zone and start taking profits. So that's the concept behind all this. And again, I hope it helps. So let's flip over to stockcharts.com and look at the bullish percent indexes. And we're not affiliated with stockcharts.com. We just use it as a tool because it's a great tool. So here's the industrials. Didn't move today. The NYA barely moved today, 0.06. The transportation index didn't move today. The NASDAQ 0.85% up. The SPX 0.32% up. The OEX minus 1.59%. So if you've been following along, this is kind of what you start looking for. If this thing starts to roll over, then the rest of them will follow, even if it's just short term. And then the INDX, minus 1.41%. So if you think about it, the SPX or the OEX and the NDX are the S&P and the NASDAQ 100, where the S&P 500 has 500 stocks and the NASDAQ has thousands. So the reason we look at these OEX and NDX is because it's giving you the kind of a more granular way of looking at those two markets. And when they start to roll over, they're the bigger bigger players in that market, in both of those markets, and they will tend to move first. So again, hopefully this helps, and everybody have a happy Thanksgiving. And until next time, take care.